Hello everyone, welcome to this video. In this video I'd like to talk to you about cryptocurrencies. Most likely you've seen it show up in news, in commercials, in advertisements, and I guess the cryptocurrency that kind of everybody knows about nowadays is Bitcoin. But you know, all of this exposure that you've had to Bitcoin and to cryptocurrencies is not just about these cryptocurrencies. Rather, it's so much more about blockchain as the technology behind these cryptocurrencies. Why? Well, this technology is expected to lead to change and innovation in so many areas, in terms of how we shop, in terms of how we do financial transactions, and of course also the pace with which we can finalize these transactions. Blockchain will simply affect everybody, ranging from single individuals all the way up to countries. And the massive increase that we see in Bitcoin value, for example, is very much because of this, very much because of the expectation that cryptocurrencies are going to be embraced and adopted because of their potential to revolutionize the way in which we do transactions, in which we live, basically. And so therefore, without any further ado, let's jump into our topic. What are cryptocurrencies? Let's start off with this basic question. Cryptocurrencies are a means for financial transactions in the broadest sense possible, right? Shopping, investments, financial transfers, anything basically that comes to mind. And hence, cryptocurrencies are digital money. If we switch to cryptocurrencies, what this is going to lead to is that this will be the end to physical money, and so basically to the current currencies that we have. Think about the dollar, the euro, the sterling, right? The pound. All of these will disappear if we are going to move to the cryptocurrencies that we currently will have. Your money won't be anymore the physical, for example, bills that you have or the coins that you have, but rather it will be money on this blockchain technology in your digital wallet registered on your digital account. Cryptocurrencies don't have a physical counterpart. It's not like gold, which basically derives its value from itself because it's a precious metal, it's being used for jewelry, it's being used in industrial applications. Is very different than this. It's also not similar in that sense to fiat money because you can't have this physical dollar bill. Surely, the physical dollar bill also does not have really money because of the bill itself. We ascribe value to it, right? The $100 bill, for example, is worth only a couple of cents because of the paper that's being used and because of the ink on it. But still, it is at least something. It's physical. You can touch it and you can exchange it physically. So cryptocurrencies are very different, both from gold as well from, let's say, fiat money. Similarity, however, is there to some extent, in the sense that just like with fiat money and just like with gold, value derives from how much demand we have for cryptocurrencies. If we have more demand for it because of certain expectations or applications, for example, then of course also the value of cryptocurrencies will increase, just like it is the case for fiat money, like the euro, dollar, whatever, but also just like it is for gold. It's interesting how cryptocurrencies arose because the cryptocurrency came to exist due to discontent with the current financial system. There are actually two big problems that proponents of the cryptocurrency really vouch for and say that cryptocurrencies are able to solve these problems, or at least the blockchain technology behind these cryptocurrencies. The first problem regarding the current financial system is a trust problem. So think about it. Countries, especially nowadays, for example, with COVID-19, right, with the pandemic, countries are printing a lot of money, for example, to support the economy. And on top of that, they increase money supply in many other ways than just printing money. They're, for example, buying some assets, financial assets, in exchange for money that they then again supply to the market. If you increase money supply, be it through printing money, be it through other practices, then this is going to lead to inflation, because there's more money in the market, and if this money is not being spent, because what you can spend it on, like goods or like services, if those don't increase in amount in the same pace, then you will get just excess money, and this money in excess is of course going to decrease the value of money, and this is basically the very definition of inflation, being that your money is losing its value in comparison to goods and services. On top of this, the other argument is that countries use their currencies as weapons against certain countries. For example, the US using its currency as a weapon against, for example, Iran and Venezuela. And you might be in favor of this, you might be against this. I'm not taking any sides here. But then, of course, some countries, some proponents are saying that this is not right, this is not ethical, especially not if this is a currency that the whole world is entitled to use, because it's the world's reserve currency, just like, for example, the US dollar is. So if you take all of this into account, that current currencies, money, are losing value simply because of arguably mismanagement, or at least an excess money supply that keeps on increasing all the time, and the way in which currencies are being weaponized, then this leads to certain questions that need to be answered, at least the proponents of cryptocurrencies say, which is basically question 1, who controls money? Question 2, who manages money? And question 3, why is money so centralized in terms of its control and in terms of its management? And these questions, of course, particularly were embraced throughout the 2008 financial crisis, and are once again underscored now that we have had the US-China trade war first, and after that, back to back, the coronavirus pandemic that we are in the middle of at the time at which this video is being shot. So the second problem, on top of the trust problem that I just explained, is the pace and cost problem. So what does this mean? Well, the current financial system is rather bureaucratic. There are lots of rules and legislations that you have to abide to in order to have your financial transactions work. On top of this, there are many financial intermediaries, and these intermediaries, of course, cost money because they need, of course, certain income for their own existence. So then you get commissions and premiums on top of what the normal financial transaction would cost. And then, of course, there are also a lot of coordination costs related to it, because you need to have everything basically work, and so you need to make sure that all of these intermediaries are actually properly aligned with basically the supplier and the demander, so the sender and the receiver basically. So if you bring this together, the bureaucracy and the intermediaries that you have, then many proponents of cryptocurrencies, and again proponents of blockchain technology, are saying that the current financial system is in many aspects too slow and too costly. And so, proponents of cryptocurrencies are basically saying that cryptocurrencies and the blockchain technology behind it are able to provide 3 solutions to the aforementioned trust problem, pace problem, and cost problem. So the first solution is that, with blockchain, with cryptocurrencies, inflation is going to be tackled in a very important way. So printing money would make place for blocks, right? Which is why this technology is called blockchain. It's make place for blocks of supplying money that would, in a controlled and predictable manner, only increase money supply. So everybody would know when a new block, in terms of time, when a new block is going to supply money to the market and how much money is going to be supplied. And the blockchain technology is able to provide this, which is very different than the current system in which you have institutions that decide on when and how much money is being supplied to the market. Second important point is transparency. Proponents of cryptocurrency are saying that the whole financial system will become so much more transparent and with that trustable, because everybody will be able to see which transactions are taking place in basically the blockchain technology, and this transparency should foster the trust that we have lost, for example, in 2008 financial crisis. Thirdly, security is a very important point because blockchain as a technology encrypts currencies and transactions, and the security again is being said as something being very, very important. Of course, the security can also come with downsides, which we'll be talking about in the remainder of the video, such as, for example, money laundering, because it can be perhaps too secure, and if there are no central institutions, and of course this can become an issue, but more about that later. So getting back to Bitcoin, which we kind of started off the video with, Bitcoin is the first cryptocurrency. And today it's still being praised for many things. First, it's still the most used cryptocurrency. Secondly, it's the most widely used cryptocurrency in terms of applications. And thirdly, it is still being prided for being the most well-known cryptocurrency. And therefore, if you look at the cryptocurrency market, the development of it and the trust in cryptocurrencies is nowadays quite often measured through demand for Bitcoin. If Bitcoin gets more demand, then oftentimes we can say that, hey, there's more trust in cryptocurrencies in general, and the adoption of this whole alternative financial sector becomes more likely, simply because it's the most used, most widely used, and the most well-known cryptocurrency around. Think of it kind of as being like the dollar, which is the world's reserve currency, and which basically is for us an indication towards how the financial markets, how the world economy is doing. Of course, after Bitcoin, many other cryptocurrencies emerged, which we nowadays call altcoins, which are basically alternative coins to the Bitcoin. Right? Most famous ones are, you could say, Ethereum and Ripple. And these altcoins basically aspire to outperform and outgrow Bitcoin, especially because Bitcoin is being said to be inferior to these altcoins in terms of its technology. It's being said to be, let's say, slower. It's being said to be less trustable, and hence less suitable for worldwide adoption. And these altcoins, of course, then, if you flip it around, try to be faster, more trustable, and again, more widely adopted. So they fight a war for becoming the cryptocurrency standard. For example, Ripple is trying to become the standard, particularly so in financial markets. So let's take this forward, shall we? So there's an important difference between cryptocurrencies, being Bitcoin, being altcoins, and regular currencies in terms of institutions that we actually just talked about, right? Institutions, monetary institutions like, for example, ministries of finance, but also, let's say, central banks. They regulate and they control currencies, especially their supply, but also, of course, many other things, such as how and when these currencies should appreciate and depreciate, for example, in value. So these financial institutions become irrelevant when we are talking about cryptocurrencies. Why would you say? Well, trust in, for example, Bitcoin does not stem from trust in institutions. Rather, it stems from trust in blockchain as a technology. There are no intermediaries, there are no money printers, there are no money regulators. And surely there are some small differences across currencies, cryptocurrencies. For example, altcoins, like for example Ripple, are a bit more centralized. For example, Ripple even has a company behind it, an institution behind it, that basically is kind of controlling and managing the Ripple currencies operations and whether it works well, and especially, of course, this company is there to spur trust in this currency from, let's say, the public sector, but of course particularly so from the financial sector, and in general, of course, businesses. As a government institution, as someone in the public sector, as a big company, as the financial sector, if you're going to adopt a cryptocurrency, you want to make sure that this cryptocurrency really works and that it's going to work well, and that there's someone at least that you can hold accountable in case things don't go well. And if there's this company like Ripple, of course, behind the cryptocurrency named Ripple, then that's great. This, of course, fostered the trust that many of these institutions look for. Still, Ripple also is so much more decentralized than the current currencies that we have, because Ripple as a company does not really micromanage the currency. It does not really, increase, decrease the supply as it wants. It is more like a watchdog, let's say, than anything else. And with that, cryptocurrencies in general are so much more decentral, are so much less regulated and controlled, so much less interfered with. And if you, of course, on top of this decentralization, add the fact that there's less bureaucracy, that there are less layers, that there are less costs, like commissions and premiums, and of course that there's also less coordination required, then people proponing basically this alternative financial system perhaps have a point. So interestingly, cryptocurrencies are also being used as a means of investment. So let's talk about this a little bit. So just like regular currencies can gain in value against each other, so can cryptocurrencies gain in value against currencies or against gold. So I mean, the dollar can appreciate or depreciate against, let's say, the euro, right? Or against gold. And a cryptocurrency like, for example, Bitcoin can of course also appreciate or depreciate against, for example, the dollar and against, for example, gold. And so this brings, of course, into question, when do cryptocurrencies increase or decrease in value? When do they appreciate or depreciate? And so what should you know before you're investing in a cryptocurrency? So let's basically start with the short run. So firstly, cryptocurrencies are used as a hedge against inflation. For people who are particularly thinking about investing in cryptocurrencies in the short run, that this might be very important. So in situations when money supply is being increased, of course, this becomes very interesting, right? So money supply can be easily increased if you think about the dollar, if you think about the euro, but for cryptocurrencies, this is not that much a case, just like with gold, right? You kind of know how much gold is in the world, right? Of course, some gold is still being gained, still acclaimed from the ground, but we kind of know how much reserves are out there. For cryptocurrencies, as I said, because it works with blocks, the increase of supply of cryptocurrencies is limited and is in very controlled fashion. So you won't get this excess inflation. And so this makes that when you have this inflation with regular currencies, this of course makes the cryptocurrency very attractive. So in situations in which you have a lot of money printing, in which you have low interest rates, situations in which you have like this excess pouring of money into the financial system through, for example, excessive lending. In these types of situations, the cryptocurrency becomes very attractive because it's at least more stable from an inflation point of view. You know how much extra supply there's going to be when, because of these blocks, part of the blockchain, and basically this is a big plus for cryptocurrencies in the war against excessive inflation and excessive value decrease of currencies. Secondly, cryptocurrencies gain traction when the world is in economic misery. So if there's an economic crisis, if the global economy collapses because of whatever reason, like the 2008 crisis, like the US-China trade war, or now that we have with the pandemic, in these types of situations, you see that there's this demand for cryptocurrencies and that money goes in that direction. And this, of course, very much related to the reason of why cryptocurrencies came to be, as they're being seen as an alternative to the current financial system. A world in misery kind of also means that the current financial system is not doing its job properly, and so then you get this demand for cryptocurrencies because it's then being seen as a situation, a possibility, an opportunity in which this alternative financial system is going to be fast-tracked and is going to adopt it much faster. So in the short run, when inflation is high, when the economy is in crisis, when you have abundance of stimulus packages, when interest rates are low, you see that cryptocurrencies start to appeal so much more. But this is just a short run, right? But some of you may be a mid to long run cryptocurrency investor. And then, of course, there are very important things to keep in mind, especially the question of will Bitcoin or any other cryptocurrency, any of the altcoins, will they go to the moon? Of course, this question also needs to be answered for the mid to long run. So for the mid to long run, there's firstly one thing that I would like to pose, which is one thing that I kind of have zero doubts about is blockchain. What do I mean by that? Well, blockchain is an innovation that most likely, very probably, if not kind of certainly, will be madly popular and embraced in finance, in investment, in commerce, due to its pace, security, and convenience, right? So we talked about this. It is very appealing as a technology because it has so many pluses. So that part is certain, but then I'm not saying that, of course, for nothing, because there's also this important uncertain part, which is the question of which cryptocurrency is going to be the standard cryptocurrency. And so which one is going to win the war for become the world's, let's say, reserve currency, just like the US dollar is the reserve currency for fiat money, right? So the regular currencies that we know about. So countries and supranational institutions like, for example, the IMF, like the World Bank, these types of institutions, they don't like cryptocurrencies, at least in their current form. Why? Because these institutions cannot control and manage most of these cryptocurrencies, if not all of them. And hence, countries try to get their own cryptocurrencies, try to develop their own based on the blockchain technology, but then, of course, in a much more central manner, in a way in which they, of course, can interfere with perhaps money supply, with perhaps the value of these cryptocurrencies, and so this is very important if you are a country, because you want to have control over your own economy, and if you are a supranational institution, and of course you don't want to lose your legitimacy in the world, and with that, again, you want to have some impact on whatever currency is going to dominate the global economy. Interesting, even some corporations like Facebook come up with cryptocurrencies. It was used Libra, called Libra, and now it's called Diem. And so we see even very interesting developments at the business level. And so, a big problem here for people who are investing in cryptocurrencies is that people oftentimes make the massive mistake of confusing Bitcoin or any other cryptocurrency like the altcoins with the blockchain technology. We need to understand that even though both are interrelated, both are at the same time also different. A cryptocurrency can be many, right? A Bitcoin is a cryptocurrency, Ethereum, Ripple, whatever cryptocurrency comes to your mind. Those are cryptocurrency, but they're all based on blockchain as a technology. That blockchain as a technology is going to be massively successful does not mean that the cryptocurrency that you are investing in is also going to be successful, right? Because it can be, of course, that this different cryptocurrency is going to be successful, not just the one that you invested in. So surely if Bitcoin, or perhaps if you're investing in an altcoin, so a different cryptocurrency, if that one gets massive adoption, if that one becomes the standard, then surely that one's going to be exploding in value and will go to the moon. But cryptocurrencies, there's so plenty that's not clear what's going to be yours that is going to be massively adopted. Surely if it is yours, because cryptocurrency market is still so small compared to that of regular currencies, there's this massive upward potential. But then the question is, what if this other cryptocurrency becomes the standard? What if the US state comes with this cryptocurrency that's going to be widely adopted all over the world? What if Facebook's DM, which I don't think is going to happen, but what if that one is going to be widely adopted all over the world? Well, then you have a problem. If you're then buying whatever cryptocurrency for this, large high fee, and then this other cryptocurrency comes and basically bypasses your cryptocurrency in terms of adoption and use and in terms of its prospects, well then your cryptocurrency may collapse in value. And so, as can be basically understood, increase of value of a cryptocurrency is very much linked, if not like kind of one-on-one correlated, with demand for this cryptocurrency. And the cryptocurrency needs to become more widespread, it needs to become more demanded, and of course it should not get bypassed. If you really want to be able to benefit from this cryptocurrency skyrocketing in terms of its market value, it has potential. As said, the cryptocurrency market is still so much smaller than that of general currencies, and with that comes massive potential. But it might not be your currency that is going to become the standard, that's going to be largely demanded, that's going to be widely adopted. So watch out. On a final note, I'd like to talk to you about some issues that the current cryptocurrency market is dealing with, aside from what we kind of talked about. The first big issue, which is particularly also an issue for investors, is how to evaluate a cryptocurrency. So how do you do the valuation? Because think about it. If you are going to do the valuation of a company, this company has revenues, it has costs. You can see the investments, you can see how it progresses. It's relatively simple. But with a cryptocurrency, it's not that simple. It's a currency, right? And so the only thing that you can perhaps evaluate is its adoption. But that's very difficult to track, and then you can see the demand. But then where does this demand come from? When is it going to go up? When is it going to go down? Ripple, as a cryptocurrency, of course, has a company behind it, and that might make this cryptocurrency more tangible. But still, this company is very different from the currency itself. It's just like, as I said, a watchdog. It's not micromanaging the currency, and so you cannot really measure the success of the currency with the success of the company. And so most cryptocurrencies, as said, don't even have that. And so most cryptocurrencies basically go up and go down based on expectations around these cryptocurrencies, which means that there's a lot of air in many cryptocurrencies because of simply people buying the future. They're buying expectations, they're anticipating, or even sometimes hoping, and I feared many times even gold digging, because they think that cryptocurrencies are really going to be the next big thing, which definitely can be the case. But as said, it might not be that one cryptocurrency that you are investing in. The technology is going to be great, but the cryptocurrency is not exactly the same as the technology behind it. So because the value of cryptocurrency being kind of one-on-one correlated with your expectations, with your demand, which are not oftentimes rooted in solid fundamentals, and are not really rooted in the certainty that you have when you're kind of evaluating a company, this brings, of course, the issue that many cryptocurrencies fluctuate excessively, and this is a big minus for cryptocurrencies, especially so if you would compare it to, for example, gold, that's oftentimes related with cryptocurrencies also is being used as an inflation hedge. Also, people flock to cryptocurrencies when economy is in misery, kind of like is being done with gold. But then again, gold's value is, of course, much more stable, which risks, of course, cryptocurrency not being able to hold that safe haven name status that it currently has in the market. Secondly, Cryptocurrencies, as said, they can pride themselves from not being that regulated, and this of course helps them bring down costs and help them increase pace. And with that, the convenience that you have when you're basically using cryptocurrencies. But on the other side of things, there's of course an increased risk for criminal activity, and you oftentimes see rumors, if not even proven cases, of money laundering on the cryptocurrency financial system, because it's very hard to track who is doing money laundering. You cannot really easily decrypt the encrypted blockchain technology. It's so secure, and with that, it's also not that much regulated, not that much controlled, that this brings the problem that you're not really knowing what type of criminal activities, illegal activities are taking place on this alternative financial system, which is a big problem for massive worldwide adoption of cryptocurrencies, of blockchain technology. Finally, technological infrastructure is an important point. Particularly, cryptocurrency platforms are often prone to cyber attacks, which of course erodes trust in these platforms. Simply put, these platforms are not yet up to par with the security and with the solidity that you have with many of the current contemporary financial system, and of course with all of the institutions being part of it. You see that these are much more prepared, have had many investments, have a lot of experience with this situation, but cryptocurrency platforms, cryptocurrency institutions basically don't have that. And then you see that there are oftentimes these cyber attacks that basically sadden people so much by people stealing basically their cryptocurrencies, and that's a big issue as well, one that needs to be solved for cryptocurrencies, for blockchain to be able to move to the next level. I hope you enjoyed this video. If so, please don't forget to hit the like and the subscribe buttons. I wish you all the best in the world and hope to see you again anytime soon. Take care.